Welcome back to Liberty Property Strategies, where we are devoted to providing people with the information and the insights that they need to be able to have the confidence to move forward on their property investment journey and further and closer towards their wealth creation goals. So I had a client ask me a very interesting question yesterday, which is the reason I thought I'd shoot this video. He asked, what are the factors that stop property investment from being an infinite game? In other words, being able to buy more and more investment property. And that obviously accelerates our journey towards our financial goals. Over the next few weeks, I'm going to be breaking down what I believe are each of the factors that are holding people back from making property investment an infinite game. And the first and most challenging one at the moment is obviously the fact that interest rates have doubled in the last year thanks to the Reserve Bank. So what we are interested in doing is finding new ways to solve this new problem. The best way to do that is to look for an increased rental return that's going to provide us with still a positive outcome at the end of the day. Because one of the things that definitely holds people back from continuing to be able to grow their portfolio is negatively geared property. One of the most negatively geared properties at the moment is a single tenant or single family property. So the way that we are solving this new problem of much higher interest rates is by introducing multi-family property investment opportunities. And where we are finding the best of these is in the booming growth markets of Adelaide and Perth. Now, they are both beautiful, amazing cities. If you haven't been to Adelaide and Perth, then I'd really recommend that you take the opportunity at some stage to get over there. And if you like the island life as a little bit of a side issue, make sure when you go to Adelaide that you go out and take a look at Kangaroo Island. It's fantastic, as is Rottnest Island, which is just off the coast of Perth. But I digress. So the opportunity in both of those booming markets at the moment with multi-family homes is to be able to get a brand new 4-bedroom house with a 2-bedroom villa attached to it. So that's 2 lots of rental return that you're receiving instead of 1. And it's when you're only receiving 1 that generally, because interest rates have doubled, that you're in a situation where it's going to become unaffordable and hold back your opportunity to move forward with your property investment journey. So what I've done today is taken the opportunity to break down the numbers for you, just so that I can show you what they look like with only a small 10% deposit. These are the numbers. The new 4-bedroom home is going to rent in both of those markets, both Adelaide and Perth. They're going to rent for about $550 a week. And you might say to me, Michael, that seems like a lot. Remember, there is a rental crisis on now at the beginning of 2023, and we're only expecting that to get worse. Both the Adelaide market and the Perth market only have a vacancy rate of 0.5%, which basically means both of these cities are full. So that's one of the reasons that a beautiful brand new 4-bedroom home is getting that terrific rental return. Now, the 2-bedroom villa is going to get $400 a week in rent. So that's a total of $950. The annual return from that property is therefore $49,400, a sensational return. Now, let's take a look at what the cost of this investment is going to be. So the land is still quite economical. And one of the great things about those 2 markets of Adelaide and Perth is that one of the things that's happened on the East Coast is that as land prices have gone up, developers have cut the blocks into smaller and smaller pieces. That hasn't happened in Adelaide or Perth yet. So the opportunity is now there, so you can still get a decent 430, 450 square metre block for only 200,000. Obviously, we're building 2 homes, 2 kitchens, 3 bathrooms, all of that sort of thing. So the build cost is a bit more at 475. Total cost of the property is 675. Then when we package in the closing costs, the stamp duty, and let me remark in terms of the stamp duty, because this is a new build that we're talking about, you're only paying stamp duty on the land component. So it's a small portion of what you'd be paying if you're paying stamp duty on the whole 675. You're only paying stamp duty on the land, the 200, and that's a small fraction. So then we're looking at a 90% loan. So you've got some lender's mortgage insurance, you've also got some legal costs, etc. And you've also got some holding costs while they construct this beautiful new property for you over, say, 7 to 8 months at the moment we should allow. From that point of view, those total closing costs are about $20,000. So the total cost of this property is $695. We're going to borrow 90%, so we only need to put down a 10% deposit, which is $607,000. We take that from the overall cost of the property of $675, and the equity or the cash you need to contribute to get this up and running is about $88,000. Then we've got the running costs of the property. I wanted to not only let you know what the initial contribution was, which is only $88,000. Now, when you consider that $675,000 here in Sydney, or most places on the East Coast, is lucky to get you a well-located 2 or maybe at the most 3-bedroom apartment, it's fantastic value and so affordable that you're getting a brand new 4-bedroom home and a brand new 2-bedroom villa for only $675,000. And by the way, apart from all the wonderful fundamentals that support the property market over in Perth and in Adelaide, the other reason those markets are performing so well for us is that they're affordable. And every time property prices go up on the East Coast, whether it be Brisbane, whether it be Sydney or Melbourne, more and more investors are showing more and more interest in the booming markets of Adelaide and Perth, because they don't want to take on a massive mortgage to be able to continue to grow their portfolio. So then let's look at what the annual outcome is for this property. We've got running costs for the property of $43,000. That's interest at 6%, plus we've got property management, we've got landlord's insurance, we've got council rates, and we've got water rates. And so package that all up, call it $43,000 approximately. Then we've got, so we started with the rental return, $49,400. Then we're taking away, obviously, the running costs, but that's not the end of the story. Because we are adding to the stock of new housing, the ATO rewards us as investors by providing us with a depreciation benefit, which approximately, in relation to that size build, is going to be about $7,000. It obviously depends on what your individual tax rate is, but I've just generalized for the purposes of this illustration today. The annual income, not expense, income from this property is, let's call it about just over $13,000 when we've only provided a 10% deposit and we've got obviously the more expensive interest rate now. This is the sort of property that is going to continue to grow in value, as will the rent in the future years. And it's the style of property that will help you to continue to grow your property portfolio, because it's not taking money from your pocket, it's putting money in your pocket that you can use for reducing the loan. You could use it for reducing the debt on your owner-occupied property. You could use it to save towards the deposit for your next property. So there's all those sorts of ideas. If you like what we've gone through today, then certainly like and subscribe to our channel, because we're going to be providing more information about how you can continue to grow your property portfolio into the future to give you more options in what's going to be a very expensive world. And remember, as we always say, the only person coming to save you is yourself.